please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. That's the Asian picture this morning. Chinese markets down quite a bit. Hang Seng also down 2%. Nikkei, of course, is part of the developed markets, but still down about 1%. Kospi down about 2/3 of 1%. And Dow futures are down quite a bit. So it looks like we'll have a soft start. But let's see if there's follow through, which has been the missing point, of course, both on the way up and on way down. Sudharshan, Sukhani, Mitesh Thakkar and Prakash Kaba now join us. Good morning, Sudharshan. If there's a gap down and if it indeed is a 60-point gap down, is that something to chase on the way down, or would you want to create some contra longs here?
Yeah, good morning. Well, Anuj, a 60-point gap down doesn't give any scope for a short sell. So first, we are taking only intraday trades, and that trade will again be only on the long side. You wait patiently. If the market stops, somewhere around 10,700 in Nifty futures would come support. So in that range, 700 to 735, 40, wherever it opens. Once the market stabilizes, then a long intraday position is justified. I do not think we should keep on running after these declines, because this market, had it been willing to fall, we would have declines. Because this market, had it been willing to fall, we would have fallen 300, 400 points by this time. So it's best to be a buyer on dips.
Okay, best to be a buyer on dips. All right, before I go ahead and invite Mitesh Thakkar and Prakash Gaba, Sudharshan, I wanted your thoughts on ICICI Bank. Now that we have more clarity on who's going to take over. Of course, there are still some questions that are unanswered, but nevertheless, do you think that it's going to be northwards for the stock now?
I think it's going to go much higher than we anticipate. The worst is over behind it. It's an investment idea and must be part of every portfolio, with the disclosure that it is part of my portfolio. For a day trader, for a short-term trader today, a dip in ICICI Bank is a golden intraday buying opportunity.
Golden buying opportunity, ICICI Bank. Okay, so that's a bullish view coming through. Mitesh, good morning. Let's talk about first what you're doing at the open, the indices. If you're getting this gap down, would you buy it?
Good morning, Survi. I think not immediately, but maybe, if there's a mild follow through closer to about 10,700, 680, I suspect are very strong support zones on the short-term charts. So anything close to about, if you open around 10,730, maybe I'll wait, but around 10,710, 700, I think that will be the range I'll look to buy into. Keep a stop below 10,675, and maybe the bounce back and get us back to about 10,780, 800.
Okay. Mitesh, good morning. What about the Bank Nifty?
Anuj, Bank Nifty also, I think, possibly will test a good support area around this 26,200, 150 zone. So if there's no follow through after testing those levels, then I think we'll consider buying. Maybe that decision will take around 9:45, 10 o'clock.
Okay, Prakash, what about you? Given that Asian markets are under pressure, the Dow futures are indicating a big fall. You get a sense that our markets could, follow suit, or do you think ICICI Bank, Reliance, etc., could hold the market higher?
Good morning, Sonia. Well, what I said yesterday was that the move that we have seen from the 9,000 and 10,000 rolls to around 11,000 rolls, these zones basically, when you see, is a reactive up move. It basically means it's gone up to come down. The internals of the Nifty, when you look at it, tells me there is weakness. Only thing is very sluggishly it was going up. It was not going up with strength. That itself was a sign of weakness. Bank, like I said yesterday, was more weaker than Nifty. 10,020 was a level that need to cross if it had to be strong. Until that happened, the bias was always down. So far, still to me, the bias is down. We could see levels closer to 10,710 zones. If it goes there, do you buy? Of course not. If it get a rally, there would be a shorting opportunities for that on Nifty. When I look at the Bank Nifty, still is more weaker than Nifty. Possible targets on the downside could be in the vicinity of 26,200 or 26,150. And if you get rallies in this, perhaps those would be shorting opportunities. I have a feeling that we are going for a couple of days down move. The bias is down.
Okay, so pitching for a downside, that's Prakash's view. Sudharshan, before we get to your stock list, I just want your view on two stocks. We've spoken about ICICI Bank, Axis Bank, as well as HDFC Bank. I mean, these are big giants, and there's news flow surrounding all these stocks.
Well, Axis is something that we can easily avoid, because we have a choice when we look for investing or for trading. So Axis is a complete avoid. ICICI, we've talked about how we should be long in that, and the same view applies to HDFC Bank. HDFC Bank has always been an investment instrument rather than a trading instrument. But as an investment idea, it is still valid. Among the three, ICICI Bank is the trading instrument currently.
Okay, Mitesh, looking at your list, you have, of course, a combination of buys and sells. Take us through the list.
Yeah. So on the stock specific side, I have a sell on CESC where the indicator setup suggests possibly some more continuation on the downside. Keep a stop at 991, look for targets of 950. HDFC Limited, again the overall setup is and chart structure is quite much on the weak side. So keep a stop at 1840, look for targets of 1790. A buy call on Bata wherein we had a good price and volume breakout. So buy with a stop at 799, look for a first target of 855. Also a buy call on Piramal Enterprises, which is now showing signs of sustained uptrend, breaking away from a declining trend line. That's a buy with a stop at 2480 for a first target of 2660, and a sell, which is a conditional sell on Shree Cement. So the structure is weak, but there's some multiple support zone at 16,000. So if we start breaking below that, go short with a stop at 16,300 and look for a first target of 15,300.
All right, so those are Mitesh's stocks. Prakash Gaba, I wanted your thoughts on how to approach Axis Bank now. I mean, so far, you know, Axis Bank has given great returns to investors, but somebody was suggesting a while back that if it does get a PSU Bank CEO who replaces Shikha Sharma, then maybe it may not be a great thing in the very near term. Would you second that opinion, and what would your advice be to long-term investors?
See, Axis Bank was one of the candidates I had shortlisted for a shorting candidate today, for intraday. To me, it's still coming down. I have a feeling that when you look at Axis Bank, the move that we have seen upper regions, there's some kind of an exhaustion. So it's not going up. Is there a chance it can slide down? Of course, it can slide down to maybe around 500 zones. So when I look at the larger move, it is down. In the shorter term time frame, I had shortlisted it today, but since I'm giving other stocks, I'll go with that. ICICI Bank looks like a better buy here. It can see an up move here. Technical targets on the upside could be in the vicinity of 299 to 300 zones. Stop below 289 on ICICI Bank should be fine. I also like Steel Authority of India. Looks good. A good 1 hour move that we saw in the last 1 hour was, I think it can take it to maybe around 90 zones. Stop below 85. The shorting candidates, the PSU Canara Bank looks weak. I think it's certainly going to levels closer to 260 zones. Stop about 277. And TCS has seen some selling pressure in the upper regions. I feel the follow-through should come in and more selling pressure should be there. It can see a slide to around 1800 zones. Stop about 1840.
Okay, so that's a sell call on TCS. Sudharshan, let's run through your stock list as well.
Well, my favorite UBL is a buy again, and while the levels will slightly change because of the expected gap down, the trend is up, so you just understand that you should be buying it. UBL and then Piramal Enterprises, which I was pleased to see was also in Mitesh's list. Same reasons, the stock is now bottoming out and looking higher. M&M is another buying opportunity. You know, we do not get worried about these gap downs. The markets, Indian markets are in a firm bull market, bull trend. M&M is a buy. Take the advantage of this small dip and go long for a short-term intraday trade as well as for a swing trade for a few days. I have two short sells. Cummins, which is in a bear market of its own, is an easy short, and Tata Power, part of the power group. We keep on getting CESC in the list. Tata Power is in the list today. The theme in power is go and sell them.
All right. Okay, gentlemen, thanks a lot for all of your stock ideas. We'll keep coming back to you for more discussions on individual stocks. Plenty of banks in focus, but also the oil and gas space is in focus this morning. The Petroleum Minister Dharmendra Pradhan says one cut in duties will not solve the problem of expensive fuel. Speaking exclusively to CNBC TV18 Shireen Bhan, the minister assures consumers that fuel will be within affordable brackets going ahead. Listen in.
Taxation is in your hands, and there people would argue that the government has not shown sensitivity when it comes to tax-related policies. This is a sector that continues to be taxed very, very heavily in comparison to our peer countries, in comparison to what is happening globally. Taxes are extremely high and have continued to be on the higher side, given the fact that the government has continued to enhance excise duties. So on that, I don't know if your argument of sensitivity will fly. So if you're talking about a series of measures that will be executed in parallel, what can we expect? What is the thinking? What is the timeline?
Shireen, there are two aspects of this kind of argument. Should we use all our eggs at a go, all our strategy at a go? As I said, this is not a single issue driven issue. There are multi-dimensional issues are involved. So When I am saying we are sensitive, we'll ensure every possibility where well within the accessibility of the common man will be well within the approachable rate, with affordable rate. This is very clear. Number two, you said about the high taxation rate. Let me share my information. All the developed economy, all the major emerging signing economy are with this kind of taxation pattern what we have today. Yes, in our taxation system there are two part. One is put by states, one is put by union government. In last October, union government took responsibility and reduced some component of excise tax. And when I'm saying we are concerned about the issue, we want to react at the appropriate time.
Okay, what does that mean, sir, that you want to react at an appropriate time? Again, as I asked you, is the view of the government now that since we are seeing globally crude prices cooling off and there has been a degree of relief at the retail front as well, that you will not act today, you will wait to see how the situation pans out and then act? Is that what we should understand?
Shirin, one decision is not going, once reduction is not going to solve any problem. It has to be well timed, it has to be looking into the geopolitics, and we will be certainly ensure the affordability. When I am saying the petroleum product will be well within the reach of poorest of the poor and middle class.
So, well, if you're an optimist, you can say that at least the slide in Asia has kind of stemmed. It isn't falling any longer. It's still a 600-point drop on the Hang Seng. No recovery, but at least no further slide. The mainland Chinese markets are also down about 2%. Other markets are down about 0.5% to 1%. Let me just check what's happening with Dow futures. There, it's still about a 200-point drop that we are looking at for the time being. And the SGX Nifty, let's take a look at the levels. Still the same, minor recovery from the lowest levels, but still about a 50-point cut on the SGX Nifty. So it seems, Sonia, that the pressures of all the trade talk, all this sort of trade war mongering, at least for now, it's still being felt in prices.
Okay, yes. So let's see whether it gets worse or not. But for now, we're back to tracking the big story of the day, the churn in the top leadership at top banks. ICICI Bank and Axis Bank remain in focus. Of course, for ICICI Bank, we know the details are now out. Krishnan ASV of SBI Capital Securities joins in to analyze the stock impact. Krishnan, hi, good morning. The feedback that we've gotten so far is that now that clarity has emerged, it's just a one-way street on the upside for ICICI Bank. You concur with that view?
Yeah, hi, good morning. I presume in my initial remarks with your channel, I kind of mentioned that we believe that this is the middle ground that the board has adopted. There was very little else that they could have done. This is probably the most logical solution. However, having said that, this is not a clean break, right? Given that Ms. Chanda Kochar remains in charge. Mr. Sandeep Bakshi continues to report into her. Once the probe gets over, it leaves the door open for her to come back. So to that extent, it doesn't really answer the questions around conflicts of interest, etc. So, I mean, I don't see the stock rallying away in a hurry. It remains a very attractively priced corporate lender, and given earnings catalysts that are likely to play out, I think that remains a good investment bet, but it will be range bound, is my sense.
Range bound. Krishnan, morning. There's more news today. All kinds of names are doing the rounds. How do you look at Mr. Jayakumar as a candidate to perhaps head Axis Bank? I'm not trying to speculate on whether this will happen or not. I'm just trying to get your evaluation of the man and what he's achieved at BOB and whether he would be the right fit for Axis.
So, I think from a protocol perspective, as I understand, I think, if you have been an MD of a PSU bank, you don't immediately get to lead a private sector bank. So there has to be a gardening leave in between, etc. So those are elements of protocol, as I understand. But beyond that, Mr. Jayakumar does come with very strong credentials. Axis Bank by itself is a fairly strong franchise on the liability side. There are issues on the asset side which have been addressed over the recent past, and I believe as we run through FY19, maybe the first half of FY19 as well. But it's a franchise that's waiting for a very credible CEO to take charge of all the strengths that already exist in place. To that extent, I wouldn't speculate on who could be the likely CEO, but I believe any well-credentialed CEO should be a welcome, positive move for shareholders and investors.
Okay, so finally then, Krishnan, putting everything together, given that, some of these stocks like ICICI Bank are inexpensive, asset quality is expected to improve for corporate lenders, how would you stack them up? How would you rate them? What would your top 1, 2, 3 picks be?
From a pecking order perspective, we have a preference for Axis Bank, followed by Yes Bank, and then ICICI Bank.
All right.
That's an interesting one. Thanks, Krishnan, for quick takes on a lot of these stocks that are in focus today. Speaking of stocks, it's time to get you some F&O trading bets as well. Chandan Taparia is joining in. Good morning, Chandan. What stocks are on your list today?
Yeah, very good morning. Because of the negativity in the global indices, some soft opening is likely to be there in the Indian indices as well. But overall, it got stuck in a range. It has been finding multiple hurdle near to 10,850, 888 zone, but at the same time, multiple support are visible at 10,720. So some dips could be seen, but we have to see whether the decline is being bought or not. That is the behavior of the market as of now. So I'll be very stock specific, and some shorting opportunity also started to getting in the market. So first it is buy on ICICI Bank. This stock has seen the strong support near to 280, 282 zone, and yesterday bottomed out on the daily and the weekly phase. It has seen some put writing activity, and a strong momentum was clearly visible in the counter. We have seen the put writing activity and the call accumulation has started to happen, so expecting it to move towards 303, 307 kind of level. So better to trade in 290 call, keep a stop loss of 5, and this call can move towards 16 to 18 rupees on the higher side. One sell call, that is on CESC. This stock has been making lower top, lower bottom formation. It has been taking hurdle at its falling supply trend line on the daily scale. It is also making lower top, lower bottom, and shorts are intact in the system, and it is respecting to its 50-day exponential moving average as a hurdle. So some weakness could be seen in this counter. We are expecting it to test 945 kind of zone, so one can sell with a stop loss of 993. One more option strategy is that on the index. Now after a long time, some weakness could be seen in the market, but again downside seems to be limited. So we are recommending to be with ratio bear put spread. The strategy is protect the downside, but again downside seems to be limited. So one can buy one lot of 10,750 put, sell two lot of 10,700 put. So in the entire strategy, one has to pay the premium of around 10 to 12 points. And if market goes lower, then we'll get profit. But unlimited risk only if Nifty goes below 10,450, and that is the not possibility as of now. So better risk reward ratio, and again we are looking for some hedging position till 10,600 in the market as of now.
Okay, Chandan, thanks a lot for stopping by and speaking with us. By the way, some amount of the selling pressure has gotten arrested in the Asian markets. So the Hong Kong market, which was down almost 650 points, is still down quite a bit, about 580 points or so. At least there is not accelerated selling compared to what we've seen in the last 1 hour. But on to our ongoing series, SEBI's watch list. This is a segment where we focus on stocks that are currently in that ASM or the additional surveillance measures list. We try to demystify these stocks and reduce the panic of sorts. Nigel joins us now, and the stock on his radar today is Godavari Power and Ispat. Nigel, over to you.
Well, that's right. The stock had a dream run. In fact, from the lows that we saw, the stock moved from around 100 rupees all the way to around 600 rupees odd. So it did have a big run. It was up nearly around 600%. We had alerted our viewers on Midcap Mania as well that, the business cycle was changing out there. But remember, from the top, it did see a correction. In fact, it was admitted to the ASM. And from there onwards, it's rallied nearly around 30%. It went to around 340 rupees odd. From there, it did see a bit of a bounce. But before getting admitted to the ASM, it had corrected already around 20% odd. Remember, the fundamentals of the business did change quite a bit. So, it produces iron ore pellets, billets, as well as steel products on the whole. And also, they have captive iron ore mines. Those were ramping up, and coal linkages as well were really increasing. The business had staged a dramatic recovery in the last financial year itself. So their capacity utilization levels did move higher. They were moving up the value chain, and raw material integration did start flowing in. And that's what led to a big turnaround in FY19. If you just pull up the profitability chart of them, you'll see that there was some deleveraging, and the profitability as well did come back in FY19 itself. So that's the profit number. Last year, they delivered a profit of around 200 crores odd. How did this happen really? Let's pull up the next chart and let's tell you exactly how did this happen. The pellet prices moved from around 4,000 rupees all the way to around 6,000 rupees. So that did help them for sure. Their output costs, what they're selling, those costs did go up. In fact, and if you just look at it, their raw material integration as well did improve. So the sourcing of iron ore, it moved from around 20% all the way to around 80%. So we should get that chart as well up for you. Coal linkages as well did improve. So the output costs are going up. Input integration as well was progressing quite well. And that's what really helped their business going ahead. Well, if you look at the triggers then, what are the triggers going ahead? The net debt to equity as well, that's improved. From around 3 times, it moved to around 2 times odd. The ROC as well improved from around 4% to around 17% odd. And there was some debt reduction as well, with improvement in their credit rating. In fact, it improved from junk rating to investment rating, and that's what's going to help them going ahead, because can they refinance some of that debt that they've taken? That's going to be very, very important. ROC as well did improve. If you pull up the valuation picture, then how does it look? They did around 600 crores last year. The enterprise value as of now is nearly around 3,600 crores odd. So let's get that up for you. So it's trading at around 6 times EV upon EBITDA. What are the triggers going ahead? Sustenance of this EBITDA number. Can the 600 crores move to around 700 crores or 800 crores? That's point number 1. The second point is they reduced debt by around 100 crores last year. Can they continue with their debt reduction? The management had told us here on CNBC TV18 that they're looking at reducing the debt by around 250 crores odd. So those are the crucial triggers. Then, in fact, that valuation matrix that's currently at around 6 times EV upon EBITDA, it could appear a little more attractive. It's had a dream run. Let's see where it goes from here.
Okay. All right, Nigel, thanks very much. Just a quick disclaimer, this is not a stock recommendation at all. We're just putting the spotlight on certain stocks that are part of the SEBI ASM mechanism and checking out their fundamentals. That's all there is to it. It's just research. Okay, on that note, let's move on and welcome in our next guest on the show. Sandeep Shenoy of Pioneer Invest Corp is with us. Sandeep, thanks for joining in. Very, very ranged market that we've been in the midst of, but there's a lot of news flow around key banks. How do you view the kind of developments that we've seen at ICICI Bank in the last 12 hours?
Well, I think they all say in a marathon race, in the last 1/3, if you stumble, it becomes very difficult for you to come back into the race. I think private sector banks, within the private sector banks, there has been some kind of a separation. A couple of banks have really raced ahead and a couple of banks have stumbled. So I think stumbled banks, for them to come back into race and reach their valuation heydays will be quite some time away. So yes, there could be trades in, but I think it's going to be a very painful transition, because you can't just put one person and expect the entire operational metrics as well as the balance sheet cleanliness to really start scaling up. It's going to be a painful process, but yes, I think it's a good start. For a long-term investor, yes, it makes good sense to latch on, but it could be more of a trader's bet rather than an investor's bet at this current juncture.
Sandeep, good morning. What about pharma? Is this start of something big? Because this looks slightly different, actually a lot different than the last 2 pullbacks that we had in pharma.
I think, Anuj, probably you could be in for, we can stretch our neck out and say maybe this is a start of a next 2.5 to 3 year upcycle in pharma companies. Yes, the larger ones went through a very painful transition, more to do with the US market rather than with the Indian markets. Of course, regulatory impact as well as inspection impact, everybody went through the ringer. But most of them seems to be slowly and steadily emerging out of it. The large guys, yes, they went through an extended phase. The smaller guys are also undergoing the same. But right now there seems to be light at the end of the tunnel emerging, and we could see some kind of uptick and uptrend in earning. And at the same time, when the sentiments are also moving and the valuation metrics could be in for a uptick, you could have some kind of a double whammy on the positive side happening for them.
Okay, double whammy on the positive side. I like that. Sandeep, hi, good morning. The other stock everyone has taken a liking to these days is Reliance Industries. Of course, it has broken out of its 9-month trading range as well. You see more upside here, and does it make sense to put fresh money to work in Reliance?
Well, these kind of stocks are not for a common investor. It's for deep pocket institutional investors who are just out there to outperform the index on a marginal basis, because a gigantic company undergoing a large metamorphosis of its own business model, I think it has its own pluses and its own minuses. But the gigantic cash flow of the company will ensure that it will tide over all the hiccups or turbulations in its new business. But yes, as I said, it's a good company, but for a common investor, I think it's not a right bet right now. It's for deep pocket long-term institutional investors.
Okay, deep-pocketed long-term institutional investors. You know, coming back to that, all right, let's do one thing. Let's take a short break. When we come back, we'll be just in time with the pre-opening rates as well. So, Sandeep, do stay on.